Well, good weekend all. Ira Epstein with your metal market wrap-up, and this is your weekend edition, and we are now on Friday, the 10th of February, 2023. You know, I ask a favor of you. A lot of you tune in, you watch me all the time. Give me a like if you like what we're doing. The other thing I want to remind you, I want you to join me in the mornings when we do our video, because it's so important to set the day. My futures video comes out typically now around 6 a.m. So it gets you going for the day's event. You learn what the fundamentals are, what's the market looking for in reports, things of that nature. We'll talk about it as we get going here. So this is a big week coming up in the metal markets for a couple of reasons. Number one, we have not seen where China has done any of the things since the lunar holiday to make the metal markets jump in any way. Nothing taking place there. Number two, what is taking place, as I look at it at least, the marketplace is making a move right now, trying to figure out what about this CPI report that is coming out. That's going to be the event. Let's review for one brief moment what has taken place. Over the past week and a half, Fed Chair Powell has spoken twice. He has been consistent in saying interest rates are going higher. I mean, you've baked in, I think, the March at least a quarter point. He has said they're going to stay up longer until the beast of inflation is beaten down, and he has not changed his goal of 2% when asked about that. We're nowhere near 2% yet, although there are ways, if you strip certain things out, you can make an argument you're around the 4% in some different vehicles. I saw the arguments for that. I can accept those. That's still double where the Fed wants to be. And there's a stickiness you're going to run into. That stickiness will show up at some point. There are things that won't go down in price. It's going to happen. In addition, there's an enemy coming at the Fed, and that's going to be gasoline prices. It's rare, I don't recall when it's happened, that in the spring and summer, gasoline nosedives. And we're not coming from a high level. We've gone down 50 cents in the last 2.5 months, so we're at a lower level. Can they break from here? Of course they could. Do I think they will? No. And what happens to the consumer when gasoline goes up? They have less money to spend, and where do they drive? The big driving season isn't in January and February. It's coming. It'll begin in April and carry on through the summer. So the market knows that. Now, this coming Tuesday morning, we get the CPI number. So what we've seen recently is the dollar jump in value. It's no longer pushing the 100 level. And this market, the euro, which is the mirror of it, isn't pushing 110 anymore. It's under 107. We've had a flip in it. At the same time, if you look at the 2 10-year yield spread, you went to 85 this week. That's a brand new high for it. So how does the gold market, the silver or the copper, without China coming into the market and doing something radical, go up with the strong dollar? That's the headwind. That's the problem the market is facing. It could all change with the weak CPI. If the CPI comes in real weak, I promise you the tape readers go, the Fed's wrong. I don't care what they say. They'll go up in March, and that's it. And they will cut by the end of the year. They'll have to because they've hurt the economy. That's if you get a very strong CPI, which would kick up the dollar. A weak CPI will break the dollar, kick up the other markets. It's the flip-flop, and a wobble puts us in one of these things like this, where we keep looking for the CPI to give us a better story. That's where we're at. Now, you're going to not only get this CPI before the next FOMC meeting, you get another one. So you got two coming at you. You got this one and then one in March, and you're going to have another jobs report in March before the next FOMC. There's a lot there. This week, remember, you just saw Canada have a real problem. They were looking for 15,000 jobs. They got 159 today. 159,000. Their bank just said they think they're going to go into a pause. A strong job market, what's that going to do? Their housing market in Toronto, for example, is in a crashing mode. They took up rates so high, they've hurt the market. But yet, if people keep getting jobs, that Then what do? How do they stop the rates? They've got their inflation problem. This is all getting very intertwined. Why did Bank of Mexico, go up 50 basis points? They normally, if they follow us, they go with whatever we did. It's rare that they jump ahead of us, and they did. When you look at the gold market, we're in a bit of a correction. You can see that. We're down 3.5% this week. We could easily go back if we want and challenge the 1805 level for neutrality. And we've talked about that on the daily. In fact, I've mentioned the 1812 area if we want to keep going down there. It would tie in with a 72-day cycle. There's different things you look at in these markets. The last rally high was 1985. We didn't quite get it on a closing basis. When you come on a weekly chart, well, back over here in March of last year, we were pushing over $2,000. We've made our most recent high just a week ago. Let's see if I can bring this in for you. Right here at 1959. Still didn't clear. Remember that 1985, I was very clear about it. You rallied back into this meat right here. And since then, you've been easing back down. The pattern is still on the weekly chart, overall bullish. This is a correction in a market that's still bullish. You still have higher lows, higher highs. Most chartists will say uptrends are made of higher highs, higher lows. And in addition, you had a runaway thrust. What does that mean? Every single week up until this week, from back here, right there, you made a higher high. Do you see that? Every single one of them. Amazing. I kept saying when it was going on, this isn't going to end well. You're going to get a correction. Big support is awaiting the market at the combination of 1806 to 1792.90. But folks, that's $56 away. It's not a little bit away. The Bollinger Band, the market kept running up to, never stayed over it, kept coming back under it, and momentum has just been lost. When you lose the embedded reading, which you did, the odds strongly favor. You're going to go down and challenge these moving averages. Now, can you re-embed only one time the week after you lose it? You'd have to get these numbers to both stay over 80. It'll be a chore, but with the CPI, it can be done. That's why I'm saying anything can happen right now. The gold-silver ratio has come from roughly the 75 level to 84.5, which means silver keeps losing to gold, and you see it. Now, silver turned out and out bearish today. Why? Lower highs, lower lows under the 18-week average. I don't know if that's it. I don't think that's right. Let me just check with you something. This high here was 24.75. Got it? What was the high of this week? 24.67. I'm right. My chart's wrong. I should have this arrow pointing up. You don't have both arrows pointing down. I didn't think so because I was doing some analysis. But you lost your upside momentum. Now the bias is down and the market probably going to try to hold between, do its best, the 18 to the 200-week average. Again, the first challenge of major averages when you haven't been at them often gets challenged. I was surprised, and I said it to you here over and over, that we went to the 100 and there. I thought you were going to have trouble here. This surprised me. So now you're going to pull back and probably challenge the 200-week average, but it could be a successful challenge being that it holds. In the copper market, traders kept saying, oh, China's coming back from the lunar holiday. They're going to be, you'll see, there's going to be a surge. They haven't bought diddly. Keep your eye on the London Metal Warehouse. You're seeing copper stockpiles. Read the newspapers about the ports in China. There's plenty of copper in the warehouses there. So there's problems that are still here. You might have to come all the way back down. Once that great engine of theirs gets going, there'll be plenty of demand. I haven't lost any of my bullishness for a $5 copper market. None. I think shallow world recessions and China will eventually fire up that engine. And when they do, they consume 50% of the world copper. But, how could you go from the COVID cases that we know they had to have, wouldn't report the numbers, to a lunar holiday and tell me that people in places aren't sick? You don't hear a thing about it in the news. It probably was going to be broadcast from the weather balloon that was flying over the United States. And by the way, let's give our president credit. And I mean this from the bottom of my heart. This is credit. He shot down some type of flying vehicle over Alaska today. Yes, it's what I said should have been done with that weather balloon. You come into U.S. airspace, you're going to get shot down unless you have permission to be in our airspace, okay? Can I make it clear? Don't come spying on us. What kind of vehicle it was? This one was shot down over land in Alaska, frozen area. They're there rushing to get it. Platinum, well, you came back. Either you rebound right away or you're coming back down maybe to 906.90. In the dollar, you've been in a decline, but now the market waits. The CPI is going to determine what this wants to do. It lost its embedded reading. Nope. It still has it. What it does this week is everything for the dollar. So you got to stay tuned and we'll have some fun with it. So what do? I want you to join me in the mornings. Can I make it any easier? At 6 in the morning in futures, you have a video awaiting you. I dissect the charts, mostly daily during Monday through Friday morning, but a lot of weeklies in there. I'm looking for trade ideas. I'm not scared of not trading. I'm not scared of telling you don't do anything right now. And I'm definitely not scared of saying jump in with both feet and here's where I think you go. And because I cover the full spectrum of futures and ETFs, there's always something to do. It's not always futures based. And that's why my combo deal where you see both the ETFs and the other is interesting. I had one trader write me today, loves the gasoline trade. He wanted to know which of the ETFs works for that. I said, UGA. There's generally one of them there. I cover all this, 40 charts, and then I move into the Spiders ETFs, but I do those at 9. I want all the government reports to come out. Now we attack that because if we can't catch it one spot, we might get it another, and away we go. How do you join me? It's simple. It is so darn simple. First, it becomes fun. I think you'll make it part of your everyday trade. How you do it is just go to our website under the word, could it be easier? Research. You can click up here. That's where it's at. You will get if you want a text when I publish, you will get an email that it's ready. You can either look at it on your phone or on our website, whatever makes you comfortable. We're always in contact with you. I'm Ira Epstein. You have a great weekend. I can't wait for Tuesday morning. Take care.